Markets too are in pain, particularly some of these capital goods stocks, and three names in particular that I would want to highlight: Thermax, Siemens, and of course some of the other capital goods stocks as well that are facing some pressure. And that is because Motilal Oswal believes that the industrial sector will face challenges in growing inflows at the pace at it did currently. And Vamakshi is here with more details on what Motilal Oswal said and the subsequent downgrades on the stock as well. Vamakshi.
Well, absolutely, Hormaz. All of these capital good names are under pressure today. When we look at the note from Motilal Oswal, they say that the capex growth is expected to be weak at 7.3% for FY25 based on the revised estimates, and 10% growth for FY26 as compared to 30% growth in capex that we had seen from FY21 to 24. They also add that private capex across base industries is yet to show signs of meaningful improvement, and they believe that the industrial sector is expected to face challenges in growing inflows at the same pace at which they had been growing in the past so far. When we look at the order inflows, they're expected to be lower over the next 1 to 2 years, and in fact higher impact is expected for companies with high exposure to railways, water, road construction, as well as private capex. But the companies which are more focused towards power, T&D, renewables, defense and high growth areas are expected to be better placed. Now what they say is that it is prudent to be selective now for the capital goods sector. They're baking in lower valuations, mainly on account of lower government capex and lower than expected private capex so far. So basis that, they've gone ahead and downgraded their rating on Hitachi Energy to sell as compared to neutral earlier. They've also cut the target price to 10,500 as compared to 13,300 earlier. Thermax, they've gone ahead and downgraded the stock to sell, cut the target price to 3,500, while for Siemens, they've downgraded their rating from buy to neutral. They've cut their target price down to 6,300 rupees per share. On the other hand, they are quite positive on L&T, ABB and Cummins in the large cap industrial space. For L&T, although they've maintained a buy rating, they've cut the target price to 4,100. For ABB too, they have a buy call but cut the target price down to 7,200. For Cummins, the buy call continues, target price cut down to 4,100. And in the defense space, they prefer Bharat Electronics. For the company, for the brokerage, the target price for BEL is at 360 rupees per share. They have a buy rating on this counter. So overall, it is mainly the lower expected order inflows that are expected to come through going forward, which is impacting the capital goods space as a whole.
All right, we take that point. In fact, for the government shift from